Probably, at least in the U.S. markets, the optimism, the climate for U.S. private markets is probably at the highest it's been in the last few years. The Fed, the big news, from a macro perspective is the Federal Reserve reduced interest rates by 50 basis points, which had an immediate impact on Wall Street, leading to record highs in the public markets, but it's already having an impact on deal making.
Welcome to the Space Capital Podcast. I'm your host, Chad Anderson, founder and managing partner at Space Capital, a seed-stage venture capital firm investing in the space economy. We're actively investing out of our third fund with $100 million under management. You can find us on social media at Space Capital. In this podcast, we explore what's happening at the cutting edge of the entrepreneurial space age and speak to the founders and innovators at the forefront.
Hello, and welcome to Space Capital headquarters here in New York City. I'm Chad Anderson. I'm here with Justus Kilian, and we are here speaking about what happened in Q3, going through the big events and talking about what helped, what shaped the space capital markets that we should be paying attention to. So, the first thing that we like to do is to talk a little bit about the macro, like what's going on in the background that is impacting the space capital markets. So the first thing is that venture capital continues to be the majority of investment into this category, into the space economy. It's coming from venture capitalists. So what is happening to venture capitalists is important to everyone. And there's been a slowdown in venture generally, primarily due to the fact that there haven't been any liquidity producing exits, right? There's been very little positive M&A, very little IPO activity. And this means that the investors in venture capital funds are not getting any capital back to reinvest into venture capital funds for them to invest in startup companies. So that's what's going on here. And that's why we're seeing a bit of a slowdown sort of generally across venture. And at the same time, there's a couple of other things that are impacting it. Valuations remain artificially high. And the reason for that is because of, despite, the headwinds in the financial markets, AI deals are sort of muddying the waters, right? Because while there's been a slowdown, there's also been an uptick and an increase in AI deals. So there's a lot of AI deals happening and at very lofty valuations, right? And at the same time, delayed fundraising for companies. So companies that raised at the peak in 2021 at these pandemic highs during the zero interest rate period, they were marked up pretty significantly. They have gone a few years now where they have not raised another priced round. They've raised additional bridge rounds, bridge financings from their existing investors, which often goes unreported. It doesn't show up in sort of the public databases and things like that. But that's how some of these companies have been surviving over the last few years. It's been a few years, right? Those bridge funds are starting to dwindle. These companies are being forced back into the markets. And as they do, there's a bit of a reckoning, right? As they, maybe they've maintained their lofty valuations, but now the market sees them, at a more subdued, more sort of valuations that are in line with more historical averages. So those valuations are now starting to reset, and we're seeing sort of those reverberations throughout venture, right? So, but at the same time, probably, at least in the U.S. markets, right, the optimism, the climate for U.S. private markets is probably at the highest it's been in the last few years. The Fed, the big news, from a macro perspective is the Federal Reserve reduced interest rates by 50 basis points, which had an immediate impact on Wall Street, leading to record highs in the public markets. That takes a bit more time to flow through to the private markets, but it's already having an impact on deal making. And we're starting to see some recovery after a really sort of like lull, uninspiring, couple of years. So what else happened in the macro markets that caught your attention?
The interest rates was the big factor. It'll take time to ripple through to the private markets, like you said. One thing that I've been, sort of focused on recently is why the U.S. venture markets are so unique and so resilient. And it really goes down to that LP base, right? And so you were highlighting them as sort of, they haven't received distribution, so there's not more capital to deploy. But the U.S. market is unique versus a lot of the Western world in that large foundations, endowments, pension funds exist and consistently allocate money to venture capital. And so, big firms have gotten bigger even in sort of like the recent slowdown.
Yeah.
And that's very different from the way that, the UK or Europe is able to fund their private markets, which is largely supported by government funds that come in and back a handful of select folks. And so, there might not be the persistence in allocating capital into those markets or the depth of capital to go from seed stage all the way to growth. It's sort of like pick a little, strategic priority. So I think that makes the, US pretty unique. And one of the reasons we are seeing such, amount of capital deployed into AI companies is because it is an ecosystem that's really driving the development of that new technology.
Good stuff. Okay, so talking about valuations, right? So according to our data, there are 47 space unicorns, which are companies that are valued over $1 billion. There's 47 of them that are held in private portfolios, right? Which cannot possibly be. So we think that there's going to be some thinning of the herd, right? As these companies come back out to fundraise and their valuations reset. And this is leading to record high consolidation, right? So we are seeing off the charts consolidation. The number of companies that are being acquired is at historical highs. We've never seen it this high. Only through 3 quarters, we're already at annual historical highs. But the average value of those transactions is also very near historical lows, right? So these are companies that are struggling to raise additional capital, that are, have limited options and are often getting acquired, for their IP or the talent or something like that by an incumbent. So there is a little bit of sort of rubber meets the road, or whatever appropriate, sort of space equivalent of that is, that's going on right now. And despite some predictions the IPO market would open up, I mean, we've seen some companies go public. Astroscale went public earlier this year on the Tokyo Stock Exchange. We've seen a few others, Solar Foods, direct listing on the NASDAQ Nordic Exchange. So we're seeing a little bit here and a little bit there. There's some news earlier about Sierra trying to go public this year, but we haven't really, it's been more of a trickle than anything else, right? And I think the Fed cutting rates could have an impact here on public offerings. We do hope that that's going to spur some more IPO activity. Will those be space companies right out of the gate or some other sort of technology companies? I don't know. I do think it's going to take some time for that to occur. So I don't know that we're going to see, any big blockbuster IPOs before the end of the year. It'd always be a happy surprise if we do. Will Sierra Space go public this year? I don't know. I think that things will really start to pick up next year. But thoughts on the exit market?
I mean, everybody's waiting. So we just need a couple to sort of, break open the door and prove that, multiple expansion is investors are willing to pay for sort of growth companies. And until that time happens, investors are still waiting.
And the other point that I wanted to make that I'd just forgotten about was that, space companies in particular, and one of the reasons why it might take a little bit more time to see space company go public is because there's a lot that companies need to do to regain the trust of investors, right? I mean, some of the news that happened this quarter, Astra, one of the big SPAC companies went public in a big sort of flurry of attention. They lost 99% of their value over 3 years since going public, and then just struck a deal to take the company private. Again, we've seen others. Arcit is a company who also lost 99% of their value over the same period and has completely pivoted their business model. And Terran Orbital got bought for $450 million, which was, just recently valued at $1.8 billion, when it went public in 2021. And others are really struggling to, others have gone bankrupt. Others are wildly missing revenue targets. And these are not the types of activities and behaviors that public markets like to see, right? And so we're starting to see that play out in the public stock prices, although we are starting to see some separation between those companies and the ones that are actually performing, right? Like Rocket Lab is starting to, get some wind in its sails. That's a company doing real things and really interesting company, Planet as well. So we are starting to see some separation, the market starting to differentiate between the companies that are performing and those that aren't. So maybe that's going to bode well for future IPO candidates.
Public markets are not the place that you want to be iterating and pivoting your business model. It's really the place you go to hone and scale your business and raise additional capital. And so we're seeing that play out. The companies that had good product market fit and were growing, they're able to accelerate. The companies that were very far from that, are being, delisted. So it's that simple.
Okay. So in probably the biggest news of the quarter, SpaceX launched a rescue mission to bring back the 2 astronauts that were stranded on the International Space Station after Boeing's vehicle, their Starliner, was deemed unfit to transport humans. So this is kind of like putting a pin in it for SpaceX. I mean, they have done a lot of incredible things over the last, 10 plus years. For me, this is kind of it coming full circle, right? Thinking about the commercial cargo and the commercial crew program, thinking about how different the world was when NASA awarded these contracts, when they gave Boeing twice as much money to develop Starliner, because it was, well, this is the sure bet, right? And then let's take a flyer and give a little bit of money to SpaceX to see what they can do. Like, this was just sort of a very triumphant moment for, in my head, when SpaceX has come full circle now and has gone from being the underdog, really to the apex player in this category, going and really helping NASA out of a difficult situation. So,
yeah.
But SpaceX also had a massive quarter, right? So in addition to that, they just landed their super heavy booster, right? But that actually technically happened in Q4. So we'll talk more about that then. What we put on the cover of the Q3 report was the Polaris Dawn mission. They launched 4 astronauts, farther than humans have gone in 50 years. They facilitated the first commercial spacewalk. And this mission was a showcase of SpaceX developed their own EVA spacesuits, which they used and appeared to work phenomenally. They also tested their Starlink communications in deep space to use that technology for comms for, in-orbit missions, which is also huge. Then meanwhile, back here on Earth, they hit 4 million subscribers on Starlink. They did a landmark deal with United Airlines. Airlines globally are just signing up for Starlink. And they also are very close to getting Starlink certified for rail. So, they've got like this great consumer business and enterprise business for Starlink growing, which is also just massive for the company, right?
I think they successfully launched a couple hundred direct-to-device satellites now as well, which is going to open up a whole new growth curve for them within the satellite communications business. So,
right.
Yeah.
Anyway, massive quarter for SpaceX, massive recent weekend for SpaceX, just with a super heavy booster, catching that with Megazilla, the super heavy launch of Europa Clipper. They were ready to bring Crew 8 back, but then the weather prevented them from doing that. Falcon 9 came back to flight, right? And this is just all in the first couple of weeks of Q4.
Circling back to that, 40 plus unicorns, when you look at the valuation map in our graphic, I mean, SpaceX is the largest chunk of that. And for good reason. They just continue to execute at a level that nobody else can compete with.
Yeah. I mean, if you talk to anybody here at Space Capital and you talk about SpaceX and their valuation, I think everyone here on the team sees a ton of upside still, right? Like they're not done yet. Right. So, anything else we want to talk about in terms of like SpaceX satellite communications?
So you highlighted the United deal, a ton of shakeup happening within SATCOM. We actually wrote a very detailed report about how this shakeup was going to happen within the legacy providers as this massive amount of new capacity came online, performance much higher, lower latency, and it was going to rattle the traditional players to the core. We wrote in detail about that in the SATCOM playbook several years ago, and what was true then is becoming much more clear and much more pronounced now. So it's a great piece of research, and it really lays out where that capacity and the value proposition and all that works. So I'd recommend taking a look if you want to go deeper on the dynamics that are shaping SATCOM, from the infrastructure to the battle at the distribution layer and ultimately the end use cases that are starting to benefit from it.
Yep. Great. So I also definitely want to touch on China. So they're an important piece of the puzzle. If you look at global investment in the space economy, we're over $300 billion invested into 2,000 unique space companies globally. 50% of that has gone to US companies, 25% of that has gone to Chinese companies, and 25% is the rest of the world, right? So China is a big portion of what's going on here on the government and commercial side. The country's space capabilities have grown at a breakneck speed over the past 5 years. In Q3, Shanghai Spacecom Satellite Technology, SSST, they launched their first satellites of their G60 Qianfan 1,000 sails constellation, right? So their constellation that is going to compete with Starlink, and it's going to be tens of thousands of satellites, provide low Earth orbit satellite connectivity. A big piece of their strategic investment and their strategic capability. You've seen how strategic Starlink has been for SpaceX. But then soon after the launch, the second stage broke up into 700 pieces, polluting low Earth orbit with a bunch of debris. Leo Labs was the first to track this and to make this information available. And so safety has sort of been an afterthought, which is a bit concerning, especially given the fact that we know that there's a bunch more, we're expecting a bunch more activity in the near future, right? Guowang and other projects likely ramping up this year. They already have, SSST already has the next satellites like produced, manufactured, ready to go and launch. So we expect to see quite a few more launches, Chinese launches in 2024 and going forward. And G-Space, the space sector spinoff of the big car company, they build a lot of the cars that you know and love. They now have 30 satellites in orbit, which provide 24-hour coverage of 90% of the globe, right? So this is a car company that is invested in satellite communications capability for their own proprietary network, right? So they're growing in a bunch of different aspects. And so anyway, lots going on in China as usual. But what's really interesting is the Financial Times did some great reporting on the economic slowdown and the crackdown on tech by the CCP, which has throttled the country's private sector. The number of startups founded in China dropped by 50x since the peak in 2018, and it's on track to be even lower this year. That is staggering. That is just falling right off a cliff. So anyway, we're going to be watching closely to see how this sort of broader slowdown in tech in China impacts China's space ambitions. I mean, because a lot of it is government funded and a lot of it government push, as it is in the US, right? Space technologies are essential for economic stability and national security. And countries are investing in this as well as enterprises, right? And as well as the private markets. And so anyway, it's going to be really interesting to see how this all plays out.
Yeah.
Thoughts on
I think there's one point to add, which is more on like the positioning systems that they're building. And so, the Chinese constellation put up by Baidu, is really delivering a high quality service, has more capabilities and sort of a much more modern architecture, while the United States, who's had a monopoly in GPS for, since the late 70s, has been slow and faced challenges around launching GPS-3. Even GPS-3 is already sort of outdated relative to what Baidu's doing. And so there is a shakeup happening within that. When you look at the US DoD priorities for space technology over the coming years, GPS was going to be one of the government-led initiatives. But recently, the Resilient GPS program announced 5 private sector partners that will be developing low Earth orbit positioning capabilities, potentially help augment and accelerate, what's happening with GPS-3. So it looks like the US is trying to rely more on commercial partners in that area, given the rate at which, China is innovating and deploying.
Yeah. This is such an interesting point. So let's spend another minute on it, because GPS was a natural monopoly for a very long time, like you mentioned, right? And natural monopoly, Justus is the economist, so you know this already, but a natural monopoly is like something where the costs are so like outweigh the benefits. And so the incentive for other people to come in is like very low, right? And so there's a few areas of natural monopoly actually within the space economy. GPS was one for a long time, but over, recently there's more GNSS systems that have come online. And you've got, Russia has one, the Europeans have one, the Chinese have one. And a lot of these systems, like the amount of time and energy and resource that has gone into this, right, is significant for them to be able to compete. And actually, now they have momentum on their side. Meanwhile, the US sort of feels like we've been like, resting on our laurels a bit. We're kind of going from a standing start just because we've been like out in front for so long, right? It's been the most capable system for so long, and it still is fantastic. But Baidu it's a multi-orbit system. There's GEO, high orbits, there's MEO, middle orbits, and there's low Earth orbit satellites. That's part of the Baidu constellation. And that provides a lot of resiliency, security. And so that's what, with this RGPS, Resilient GPS system, is like to sort of build some of that out, right? And to benefit from all those different orbital regimes. But there's a ton more work to be done, right? And actually, if you look at one of our portfolio companies, Sean Gorman, CEO and founder at Zephyr, has written a couple of really great opinion pieces in Space News that are worth checking out. Because the RGPS contracts to build out low Earth orbit constellations, we've got Zona as a portfolio company of ours, and they're competing in that. But there's also a lot more to be done, right? And the handsets and actually like the resiliency of the signals and stuff. So anyway, if you want to dive deep and geek out on this, I would encourage you to check out those opinion pieces by Sean Gorman. Yeah. So, okay. So the other big area that we wanted to talk about, and maybe there's more, but the big area that I had on my list was AI and spatial intelligence, right? So first of all, we have been operating in space for decades. We've had Earth observation satellites in orbit for decades, generating a ton of data, lots of images, lots of sensor data about the surface of our planet. This has powered a lot of our climate science. This has powered a lot of the geospatial industry today, to date. We have more satellites going up all the time, right? So with SpaceX removing the barriers to entry and making it more accessible and affordable to get to orbit, we've seen many, many more Earth observation satellites and different sensor types going up into orbit. And in Q3, Maxar launched their Legion, Worldview Legion satellites, which are incredibly capable satellites. They provide most of the Earth observation data to the U.S. intelligence agencies. And they also just recently announced an exclusive partnership to sell their commercial imagery from those satellites, from all their satellites, including their new Legion satellites, through Skywatch, another portfolio company, which is a big win for Earth observation and getting access to really great data, right? So anyway, the point is we have a ton of data and there's way too much of it for humans to be able to get our arms around and understand, right? Unless we run it through an AI system.
Yeah.
That's the only way. So that's why this is such an interesting area of opportunity for us at Space Capital is we have massive, massive data sets and new interesting data coming online all the time. AI is a tool that we can now use to derive really useful insights from this data. So there were a few massive developments in AI and spatial intelligence in Q3, one of which Google is partnering with leading wildfire authorities to launch FireSat. It's a new global satellite constellation to detect wildfires the size of a classroom. So very small fires within 20 minutes. And the idea here is to be able to have a global warning system to identify small fires early so you can actually take action and do something about it. This is a step change capability that is enabled by Muon Space, another one of our portfolio companies that's working with Google and the Moore Foundation and the Environmental Defense Fund with this Earth Fire Alliance program, which is desperately needed. I mean, the number of wildfires going up globally it's increasing all the time, and we just don't have the capability to understand and address.
Yeah. NGA announced $700 million initiative to leverage AI for data labeling. They've said that training data is the new gold, and they sit on the largest repository of imagery and training data out there. So I think it's a really important indicator of how valuable AI synthetic data are going to be to actually unlocking the value of a lot of these new constellations.
Yeah. And the head of AI, the NGA, was actually speaking at our annual Space Capital Summit in May. You can see that whole conversation on our YouTube channel as well. So in case you want to dig a little bit deeper there. And they were on stage with Rendered AI, who is a portfolio company that's built a synthetic data platform for training AI. Yeah. And they had a big announcement this quarter. In Q3, they announced a deal with ANSYS that combines forces to bring faster simulation of large environments to remote sensing professionals and computer vision for synthetic aperture radar. So ANSYS, massive company, not focused on space, focused on terrestrial markets here, and bringing in this expertise from Rendered to help them make sense of synthetic aperture radar information from orbit to power their terrestrial markets and their terrestrial customers. You can read more about that. That's also very fascinating. And then, of course, the big news that we'd be remiss if we didn't mention is Fei-Fei Li, the godmother of AI, and some of her PhD students from Stanford University have come out of hiding or stealth, and they're announced, their new project, World Labs, focused on spatial intelligence with a massive, war chest of funds. So this is going to be a fun one to talk about. What are your thoughts on World Labs?
Yeah, so they raised $230 million across a couple different transactions. The company's already now valued at more than $1 billion. And, I think it's really interesting. We spend a lot of time thinking about this distribution layer, like how you abstract away the complexity of, raw imagery and make it much more accessible. And you don't often see this big of transaction or this big of step change, but what they're working on is really what they're calling large world models. So it's the ability to develop AI systems to understand and interact with 3D physical world, right? And so it's incredible. So Fei, she was the former head of AI at Google Cloud. She's best known for her work on ImageNet. It's a data set that helped revolutionize computer vision. And so, right now, this sort of spatial intelligence capability that they're building, a couple of our key researchers that came from Stanford had helped develop a couple techniques. So one is called Gaussian splatting, which was sort of the more traditional method of how we take 2D space and render it in a 3D world. That team also developed a new capability, which is called NERF. So this is neural radiance fields. And, it's using machine learning to take a 3D image and actually interpret and then recreate it in a 3D context. And so there's a tremendous amount of opportunity that's going to come here. It's going to give us a much deeper understanding of our physical world, and I think has a huge potential to unlock the value of satellite imagery and all different types of geospatial imagery for a whole new generation of companies to build on top of.
I think this opportunity in geospatial intelligence and taking all of this data and applying AI to drive useful insights and to do really interesting new things with it is very underrated at the moment. It's just so interesting how much opportunity there is here, at least from our perspective. It's a key area of focus for us in our fund. We're actively deploying in this category. If you're building in this category, we definitely want to talk to you. We've invested in some really interesting companies in this space already, which are all sort of like compounding value for each other. So anyway, this is an area that we're going to continue to look at now and going forward. And if you're not familiar with it, you're missing out. So we've made a bunch of materials available on our website, and through this report, you can also get access to them as well. So what else didn't we cover?
There's a couple transactions that I think are really important and sort of indicative of where the bar sits for growth capital. So we are seeing growth capital come in. Importantly, SpaceX has not had to raise outside capital equity financing since 22. So over that period of time, we've seen infrastructure investments maintain a relative consistency. So what that means is new growth companies are coming in and filling that gap where, SpaceX hasn't needed outside capital. And so in this quarter, I think that there's two really great examples of Series B rounds that sort of show where that bar is at. So Impulse Space, led by Tom Mueller, so this is SpaceX's first employee, they're building an orbital transfer vehicle. They successfully demonstrated the Mira platform last year. They announced Helios, which is their high energy kick stage capability that can take payloads to GEO. They've won a ton of DoD contracts. They're really building a world-class team. And so they brought in $150 million in a round that was led by Founders Fund. So, it's a great example of the milestones that you need to be hitting, particularly if you're looking at these sort of more emerging industries, a little bit higher risk. Truly world-class teams, incredible technical milestones, strong revenue milestones, the ability to sell into the government.
It's important to be addressing a near-term market too, right? Because there's a lot of really interesting things and a lot of really interesting tech in these emerging areas, but you need to be addressing markets that exist today, right? And the market for what they're doing is now really starting to emerge, right? And so they're the right solution at the right time, which I think is an important nuance to.
Particularly in deep tech. So unless you can realize revenue going into your Series B round, and we're talking $5, $10 million of realized revenue from doing some sort of critical work that you're associated with your product or service, you're not going to be able to raise that capital. And a lot of these companies that are thinking much farther out, there just won't be the equity financing there to scale unless they can realize that revenue. So that's the unlock.
Yep.
Second great example, which we already mentioned, but we should mention again, is Muon Space. So, led by a former Skybox engineer, and he's an operating partner at our firm, Johnny Dyer. The company is designing, building, and operating mission-tailored low Earth orbit satellites. And they secured $100 million in agreements in 2024 alone. They flew their first satellite last year, from back of sheet to orbit in record time, and particularly for a highly complex, satellite. And there's customers out there that are buying this capability. And that 100 million, in agreements announced is a pretty high bar to set for Series B round. So they brought in about $56 million in their Series B round. And again, really impressive team, more talent aggregating that company, really strong revenue traction, really differentiated technology. This is what it takes to be raising growth rounds in the market right now.
And to your point, right? I mean, that they were founded in 2021. They raised the seed round. They raised the Series A in 2022, and they raised the Series B just in this last quarter, right? So this is, again, regardless of market cycles, right? There is capital that's going to great companies that are doing important things and are addressing real markets and being able to prove these milestones. So regardless of market cycles, we're still continuing to see really interesting innovation. I do think, we started this off with, that I do think, the Fed's cutting rates. I think that there is some tailwinds in the public markets that's going to flow through to the private markets. We'll see how that all plays out. We're really excited to see how we end this year in Q4. It's already been a really interesting year. I think we're on the upswing. And so we will see you back here for Q4 to see where we end up in 2024.
Thanks for tuning into the Space Capital Podcast. If you enjoyed this episode, please leave us a review and subscribe to make sure you never miss an episode. And if you're interested in learning more about investing in the space economy, I invite you to visit our website, spacecapital.com, where you can get access to more industry-leading insights and learn how you can join the entrepreneurial space age.